Stop scrolling. Tell your plants you'll water them later. Tell your dog to be quiet. Tell your wife too, if needed. Even tell your goldfish to stop staring at you like it knows something. Are we understood? Good, because what I'm about to say is going to hit hard. It's going to irritate you. It's going to make you want to toss your phone across the room. And somehow, it's also going to make you smile. Ladies and gentlemen, Asian guys here. It's Thursday, January 15th, 2026, and I'm about to say something that sounds completely insane. Yesterday, Wednesday, January 14th, we talked about how the gap between New York and Shanghai blew out to $13. We talked about how Shanghai was trading around $14 while New York was stuck near 91. We talked about how this was proof that the paper market was breaking down and the physical market was taking control. And then yesterday afternoon, something happened that I did not expect. Something that changes the entire game. JP Morgan, the bank that has controlled and manipulated the silver market for 15 years, the bank that has paid hundreds of millions in fines for spoofing, the bank the silver community loves to despise, just flipped. They switched sides. They went from being the largest short in silver to becoming net long. They dumped their short positions. They covered their exposure. And now they're buying physical silver aggressively, not to suppress price, but to profit from what's coming. And if you don't grasp what this means, if you don't understand the implications, you are going to miss the biggest opportunity of your lifetime. So be quiet, pay attention, and let me walk you through exactly what happened in the last 24 hours, because this changes everything. Let's start with the obvious question. John, how do you know JP Morgan flipped? How do you know they covered their shorts? Fair question. Here's the answer. Yesterday, Wednesday, January 14th, silver prices in New York collapsed $8 in a single afternoon session, from 93 down to 85, an $8 drop in 4 hours. If you were watching live, you probably panicked. You probably thought, that's it, the rally is over, the banks won, I should sell. But that's not what actually happened. What happened was a massive short covering event. Let me explain. When you short a commodity, you borrow it and sell it, expecting to buy it back later at a lower price. But if the price rises instead, you start bleeding money. Eventually, you're forced to close the position. You have to buy back what you sold. That's called covering your short. And when you cover, you become a buyer. You create buying pressure. But here's the problem. If you're a massive bank that needs to cover millions of ounces of silver, you can't just start buying openly. If the market sees you buying, the price explodes and you pay far more than you want. So what do? You force a crash first. You dump paper contracts to slam the price down. You spark fear. You trigger stop losses. You push retail traders to sell. And while everyone is panicking, while everyone is dumping, you quietly buy back your short positions. You absorb everything being sold. And because supply is coming from panic sellers, the price doesn't spike. It drifts lower or stays flat while you accumulate. That is exactly what happened yesterday. JP Morgan dumped paper to push silver from 93 to 85. Retail traders panicked and sold, and JP Morgan bought it all. They covered roughly 99% of their shorts in a single afternoon. How do I know? Because the price action tells the story. If that drop had been real selling, if true supply had hit the market, silver would have kept falling. It would have gone to 80, 75, maybe even 70. But it didn't. It slammed to 85 and then stabilized. Why? Because once JP Morgan finished covering, the selling stopped. They got what they needed. They removed the weight from their neck. And for the first time in 15 years, JP Morgan has no incentive to suppress silver prices. In fact, they now want the price to explode because they're no longer short. They're long. They hold physical silver, hundreds of millions of ounces. Every dollar higher is pure profit for them. This is the end game. This is the moment we've been waiting for. The biggest bear in the silver market just turned into a bull. And when the biggest bear flips bullish, there is no ceiling on price. Now let's talk about the anger, because I know many of you are furious. You're thinking, hold on. JP Morgan manipulated silver for years. They crushed prices. They hurt retail investors. They paid massive fines. And now they get to profit on the upside too? How is that fair? You're right. It isn't fair. It isn't justice. It isn't karma. But you need to set your ego aside for a moment and look at what this really means for you. Because here's the truth. It doesn't matter that JP Morgan was the villain. It doesn't matter that they rigged the market. It doesn't matter that they'll make billions as silver rises. What matters is this: the ceiling on silver prices just vanished. For 15 years, every time silver tried to run, JP Morgan shut it down. They dumped paper, they raised margins, they engineered crashes, they did whatever it took to cap the price because they were short. Every dollar higher meant losses for them. They were the ceiling. They were the reason silver couldn't break 50. They were the reason every rally failed. But now they're not short anymore. They're long, which means they are no longer the ceiling. They're the floor. Think about it. If JP Morgan owns hundreds of millions of ounces of physical silver, do you really think they'll allow the price to collapse? Do you think they'll sit by and watch their asset lose value? Of course not. They'll defend it. They'll buy every dip. They're going to use their massive capital stack to push prices higher, because now it's in their best interest to see silver hit $150, $200, even $300. This is the most bullish signal imaginable. The lead manipulator just turned into the biggest bull. And if you hold physical silver, you're no longer on the outside. You're in the same boat as the shark. You're now aligned, and that shark is about to use the same dirty tricks it once used to crush silver, to now launch it sky high. So don't be mad, be smart. Understand that this is a once-in-a-lifetime moment. The biggest roadblock to silver's rise just vanished, and the runway to $300, $400, maybe even $500 is now wide open. Now here's what JP Morgan knows that most of the market hasn't caught on to yet. They know China is preparing to hoard every ounce of silver it can find. They know the Shanghai premium isn't going anywhere. They know the physical shortage is real. They know industrial demand is exploding. They know vaults are being emptied, and they know the West hasn't even woken up yet. But when it does, when Apple, Tesla, and Samsung realize they can't secure the silver they need, when sovereign wealth funds and pension managers flood in looking for a hedge against a dollar collapse, the price is going vertical. JP Morgan wants to be ahead of that stampede. They're front-running the crowd. They're buying while the retail world is still nervous, while silver is still around $90 or $100, because they know where this is headed. In 6 to 12 months, silver could be $200 or $300, and they want to buy low now to sell high later. This isn't a theory. This is how professional positioning works. The smart money sees the macro, watches the data, and moves early. And right now, the signals are screaming. JP Morgan is making the biggest trade of the decade. Now let's talk about retail and what's happening to the little guy. While the big players are loading up, everyday investors are quietly getting locked out. Just yesterday, AppMex, one of the top online bullion dealers in the US, rolled out a new rule: a $10,000 minimum on silver purchases. That's 111 ounces at $90 per ounce. Most retail buyers don't have 10 grand lying around for silver. That's a serious barrier. But this isn't random. AppMex isn't doing this to be difficult. They're doing it because they don't have the inventory to fill small orders. They're rationing. They're prioritizing whales, the banks, the big fish. Meanwhile, smaller investors trying to buy 10 or 20 ounces, they're being shown the door. This is what lockout looks like. It's not coming, it's happening right now. And it's not just AppMex. Scottsdale Mint, another heavyweight, just had their CEO, Josh Farr, publicly state that the silver battle has gone institutional. It's no longer a fight between retail and banks. It's now bank versus bank, institution versus institution for the scraps of remaining physical supply. Retail is being pushed out. We're not even part of the game anymore. And that's the plan. They don't want us in this trade. They want it all to themselves. They're closing ranks, locking the gates. If you're not already inside, you may not get in. So if you've been sitting on the fence, waiting for the perfect moment to jump in, waiting for silver to pull back to 70, and I've got bad news. That dip's not coming. And even if it did, you probably couldn't buy anyway, because inventory is gone, dealers are out of stock, and minimum orders are out of reach. If you want silver, you need to act now. Not tomorrow, not next week. Today, before the doors shut completely. Now let's rewind and look at how we got here, because if you've been following this channel, none of this should be shocking. We've been saying for months, the banks aren't stupid. They see what we see. They read the same signals. They knew this pivot was coming, and now it's here. Let's go back 6 months. July 2025, silver was hovering around $30. Commercial banks, JP Morgan, HSBC, Scotiabank were all heavily short. hundreds of millions of ounces. That's how they made their money, suppressing the price. But something shifted. Physical demand started tightening. The Shanghai premium widened. China was discussing export controls. Vaults were draining fast. And the banks noticed. They're not blind. They've got better intel than we do. And they realized the old playbook, slam the price, profit off shorts, wasn't going to work anymore. Why? Because the shortage was real. So what did they do? They started exiting. Quietly, slowly, no headlines. They'd engineer a crash, spark fear, and close out just a slice of their short book. Then they let the price recover. Then they smashed it again and covered a little more. That's why the second half of 2025 was so volatile. It wasn't random noise. It was JP Morgan systematically unwinding their short exposure. Step by step. While doing something else behind the scenes, they were stockpiling physical silver. They were buying bars, draining metal from COMEX vaults, quietly building their private hoard. And we told you this was happening. We warned you that JP Morgan was positioning for the breakout. We told you they wouldn't stay short forever, that they would flip, and now they have. The final confirmation came yesterday. That $8 plunge from $93 to $85, that was the final flush. That was JP Morgan clearing out the last of their shorts, exiting clean, resetting the game. They're net long now. They're aligned with us. And the playbook just flipped. Now here's where it gets really interesting, because this is what comes next. JP Morgan isn't loading up on physical silver just to ride a move to $95 and make a quick 10%. No, they're positioning for a move to $300, $400, maybe even $500. This is about the long game, and they're not going to let the price slide now. Why? Because any drop invites competition. If silver dips back to $80, you better believe retail investors will jump in, institutions will jump in, and JP Morgan would have to fight for every ounce. They don't want that. They want to corner as much supply as they can without resistance. So, what's the strategy? They're going to push the price higher, slowly at first, then faster. They'll pour money into the paper market to create momentum. They'll trigger chart breakouts, get the algos buying, get the momentum traders chasing. As silver rises and the headlines start flying and retail starts to FOMO in, JP Morgan will quietly offload their paper positions for profit. But they'll keep the real prize, the physical silver, because that's where the explosion's coming. This is the game, and it's already in motion. Silver isn't going back to $80 or $70. It's headed to $100, then $120, then $150. And once it crosses $150, the media will wake up. CNBC will start calling it the new Bitcoin. The momentum will feed on itself, and that's when the real parabolic move begins, from 150 to 250 to 350, because the fundamentals haven't changed. The shortage is still real, industrial demand is still surging, vaults are still empty, and the biggest suppressor just became the biggest driver. Now let me say something to the people out there who are tempted to sell out of spite. The ones thinking, I'm not letting JP Morgan win. I'll dump my silver just to deny them the upside. Don't be foolish. If you sell your silver at $90 or $100 out of anger, you're not hurting JP Morgan. You're helping them. They're the buyer. They want your silver. Selling now is like handing them your winning lottery ticket for free. Don't do it. Hold your silver. Lock it down. Let JP Morgan do the heavy lifting, because now their interests are aligned with yours. They're long. They want the price higher, and they're going to use every tool, every ounce of influence, every dollar of capital to drive that price up. You don't have to like them. I don't. But I'm not going to cut off my own win out of spite. Be strategic. Be smart. Let the shark pull the boat. And if you're holding physical, you're already on board. Now, let me give you some historical context. This isn't the first time commercial banks have flipped sides. This same pattern played out in gold back in the early 2000s. In the 90s, the big banks were short gold. They suppressed it. They kept it below $350 for years. But then something shifted. Fundamentals changed. Central banks started buying instead of dumping. The US dollar weakened. The deficit exploded, and the banks saw it. They began exiting their shorts. They started going long. What happened? Gold soared from $250 in 2001 to $1,900 by 2011, a 760% surge, and the banks made a killing. They flipped, and they rode the wave all the way up. Now the same thing is happening in silver. Commercial banks are flipping from short to long, but this time the setup is even bigger. Silver's market is smaller, demand is more explosive, the shortage is more severe. We're not talking about a 3x or 4x move. We're talking about a potential 10x, from $30 to $300 or more. And if you're holding physical, you're in position. Now let's talk about China, because this is the final piece. China is the reason JP Morgan is making this move right now. They know China is about to vacuum up the remaining global silver supply. They know the Shanghai premium isn't going away. They know China's export rules have created a one-way gate. Silver flows in, but it doesn't flow out. And they know Chinese industry, especially solar, is ramping up at full speed. The EV boom is growing, electronics demand is exploding, and all of these sectors need silver, more than the world can currently produce. That means China's going to keep buying, the Shanghai price will keep climbing, and eventually the Western price won't be able to lag behind. These markets can't stay disconnected forever. At some point, the gap becomes too wide, and something gives. Maybe it's a delivery default, maybe a force majeure, maybe a government steps in. But whatever the trigger, Western prices will have to surge to catch up with the East. And when that happens, anyone holding physical silver is going to wake up to life-changing gains. JP Morgan understands this. They saw the Shanghai signals months ago, the rising premium, the draining vaults, and they made their move. They dumped their shorts, they went long, they stepped in early before the rest of the world caught on. They front-ran China. They got ahead of the crowd, and now they're sitting on hundreds of millions of ounces of physical silver, just waiting for the West to realize what the East already knows. This is strategy. This is game theory. JP Morgan is playing chess, while the rest of the market plays checkers. Now let's zoom out, because this isn't just about silver. This is about the US dollar, the global reserve currency, the foundation of American financial dominance. And that foundation is cracking. The widening Shanghai premium isn't just about supply, it's about trust, or the lack of it. The East doesn't trust the West anymore. They don't trust the Fed. They don't trust the US government. They don't believe the dollar will hold its value. So they're moving out. They're buying gold at $4,600, silver at $14 in Shanghai. They're shifting into hard commodities. They're ditching treasuries, dumping dollars. What we're seeing is the early stage of a currency crisis, not an overnight collapse, but a slow, grinding erosion of trust that speeds up with every new headline. And JP Morgan sees it. They read the signs. They know the dollar's days of dominance are numbered. They know what happens next, a massive shift into real assets, hard assets, tangible stores of value. And that's why they're buying silver, not just to ride a market squeeze, but to front-run a dollar collapse. When the reserve currency crumbles, gold and silver won't just rise, they'll surge, because they'll be among the few things left that still hold value. This is the endgame, the moment the system's been crawling toward for decades. And JP Morgan is not going to be caught on the wrong side of history. So let me give you the roadmap, the next 6 months, step by step. Short term, the next few weeks. Expect consolidation between $90 and $100. JP Morgan will keep buying dips. They'll act as a floor beneath the market, quietly absorbing supply. The price may not skyrocket right away, but it will grind higher, steady, relentless. Then the trigger, the breakout moment. Something sets it off. A failed delivery on COMEX, a major manufacturer, Apple, Tesla, whoever, saying they can't source silver. A new wave of Chinese export controls, or the Fed hitting the panic button with another round of QE. Whatever the spark, the reaction will be immediate. The price will gap up $100 to $120, maybe $130 in a single trading session, and that's when the headlines hit. That's when CNBC starts talking silver. That's when the retail flood begins. That's when the algo traders pile in. And then the real move begins from $130 to $180 to $220. And at $220, the shelves go bare. Dealers run dry. Mints shut down. Premiums explode. $30, $40, maybe more. The only way to get silver will be to pay whatever number the seller demands. And then, vertical. $220 to $300. $300 to $400, because by then, confidence is gone. The dollar is unraveling. People won't be buying silver to speculate, they'll be buying to survive. That's the playbook. That's the trajectory. And if you're holding physical silver, You're perfectly positioned, so don't panic, don't sell, don't let volatility shake you out. Hold. This is the moment we've been preparing for. Now let's address one last fear, the idea that JP Morgan might rug pull us again, that they'll build this massive long position, pump the price, then dump it all and crash the market. It's a fair concern, but here's why it won't happen. If JP Morgan unloads at $200, sure, the price drops. But what then? China swoops in, the East buys everything, supply disappears, and JP Morgan is left with empty hands, missing the biggest price surge of the century. They'd blow their entire position for short-term gain and miss the real move to $300, $400, or beyond. That's not how they play. They're too smart for that. They've seen the shortage data. They've seen the demand. They've seen the dollars decay. They're not in this for a quick buck. They're in it to ride the full wave. So stop worrying about JP Morgan dumping. They won't. They're holding. And you should too. So here's the final word. JP Morgan just flipped. They've switched sides. They're no longer the ceiling. They're the engine. They're the biggest bull in silver now. And that's the most bullish signal this market could possibly receive. So don't resent their profit. Align with it. Don't sell out of spite. Think strategically. Hold your silver. Let the whale do the swimming. And ride the current with them. This is John A.G. from Currency Archive. It's Thursday, January 15th, 2026. JP Morgan is long. The endgame is active. Retail is locked out. APMEX minimums are at $10,000. Dealers are empty. Mints are months behind. The banks are front-running China for the last ounces on Earth. If you don't own silver yet, buy it now. If you already do, hold it. Target, 375. Timeline, accelerating. Squeeze. Already in motion. The bears are gone. The bulls are here. And we're all about to get very, very rich. Remember to like, subscribe, and share. Hold the line.